Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving an outlook of the market for the week of the 14th of February until the 18th. Now before we get started, as always, please know that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment or trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. Now, as we mentioned in our last look back video, the week ahead will again be one to watch out for, as it has been for the past couple of weeks, with regards to stocks and the current Q4 earnings season. Last week, if you remember, we had Pfizer, Disney, and Uber reporting their numbers, and some of the big names for this week will be Walmart, Nvidia, and Yandex, for those who want to keep these stocks on their watch lists. Now, the impacts of the earnings call and in general the earnings reports can clearly be seen from the last couple of reports we've covered. Taking by example, even as recently as last week's reports, so we saw all three companies that we mentioned earlier on, how they basically reacted following the sessions after the reports were released. Disney and Uber, they rose as much as 5%, while on the flip side, Pfizer dropped by as much as 5% with the open of the session after the report. Now, for next week, like I said, we'll be having Walmart as one of the major companies reporting their numbers. I'll just pull up the stock in the meantime and the chart. Now, the company, it's expected to report a year-over-year increase in its earnings when it's due to report the figures on Thursday before the market open. Meanwhile, the revenues are expected to show a slight drop. Now, it's one thing to note is that the actual figures are the one expected to drive prices. Of course, we just mentioned the estimates, which they can be clearly found on, whatever websites you're using when it comes to looking into the earnings reports. But it's always worth remembering that any news coming from the management's discussions as well, with regards to forward-looking business conditions, can also become a huge price driver. Now, the company previously beat its revenue estimates in Q4 of 2020 by a margin of close to 13%. Now, if we look prices overall in the year, they're down by almost 6%, but it's also worth noting that stocks in the US for the past couple of weeks have been dropping. So, industry, usually when you have an industry or a specific sector posting a drop in prices, you can expect the stocks in that specific sector dropping as well, as is the case for Walmart. Now, moving on to the next one, it's gonna be Nvidia. Now, Nvidia, it's going to be reporting the numbers on Wednesday the 16th. It's quite an interesting stock considering the rise in popularity with regards to NFTs as well. As a manufacturer, for those as a manufacturer of GPUs, which they are needed for machine learning applications, gaming applications, and all the way to image and video editing, something that is also probably needed with NFTs, we could see a surge in demand being reflected in the company's stock price. Now, the overall estimate for Nvidia is to deliver a year-over-year increase in earnings on higher revenues when it reports its numbers. Another thing which is key to note is that on the year, prices are down by close to 20%. But if I zoom out the chart, if I just switch on the weekly, we can see this huge drop on the year. But overall, stock prices of Nvidia are up by a staggering 700% if we look at them over a 5-year basis. So again, something that's always good to do is just to have an idea of the bigger picture when it comes to the specific stock price, because even though the year is down by almost 20%, overall, if you look at it, even a 5-year basis is not even the full review of the stock price throughout its inception. So even if we look at it from a 5-year basis, we can see that it's up by a staggering 700%. Lastly, we'll be looking at Yandex as well. Let me just switch the chart. put it onto the daily. Now Yandex is going to be reporting the numbers on Tuesday the 15th, so it's going to be the first out of the three. The company is expected to show an increase in revenues from last quarter, up from 86.99 billion to 110.49 billion. Now the EPS estimate is also expected to show an increase, but what is worth noting is that the company has beaten its past 4 revenue estimates. Now obviously this is not an indication it's gonna beat them on this occasion as well, but just something worth noting with regards to the trend of the company reporting its revenue estimates. Now, like I said, well, it's not likely going to affect the earnings report. We also had a recent headline which was towards the end of January surrounding Yandex, which saw the company finally reaching a settlement in its search engine dispute with a Russian government body. Its prices are down by 27.5% on the year. Well, again, like we mentioned with Nvidia, if we switch on the weekly time frame, on a 5-year basis, its prices are up by almost 100%. So yeah, this is with regards to the 3 major stocks. Again, they're not the only ones, but some of the ones that could be worth keeping in your watch lists. Next up, we will move on to FX. Just putting the chart. So with Forex, we'll be having employment data out of the UK on Tuesday morning, and then on the same day we'll be having GDP figures for the Eurozone. So Tuesday is definitely or most likely going to be an action-packed day when it comes to those key data. Now later during the week on Thursday, we'll have inflation figures for both the UK as well as Canada. Now, we saw last week how the US reported its highest inflation reading since 1982, which came in at 7.5%, and also prompted the case for certain people to come in and basically hint at further rate hikes, which obviously boosted the US dollar. And we can see this, for example, with the euro dollar, that prices drop. If I look at the pound dollar, we'll see more or less a similar image. While the prices, they didn't really drop overall. We had a dip here, but then there was some positive news with regards to the UK and England specifically ending its COVID restrictions as early as the end of February, which saw a boost in the prices of the pound. So yeah, with the US reporting an inflation reading of 7.5%, it's definitely worth seeing how the rest of the major economies compare, as the impact from COVID starts becoming more and more prevalent. And other than that, looking into some of the safe haven currencies, such as the Swiss franc and the Japanese yen, we could see a further boost in the coming weeks, potentially, with the US saying that Russia could be preparing for an invasion against Ukraine as early as next week. Again, this is obviously not concrete facts whether Russia is going to do that, but it's just reports that came in from the US with regards to the tensions between the two countries. Now, if I switch to the euro Japanese yen for reference, we saw it dropping by as much as 90 pips last week. So you can see the drop here. And if I switch to the euro Swiss franc, its prices dropped even more by 109 pips. So over the weekend, depending on the fact of we could have some further reports with regards to the tensions, and if they come over the weekend when the markets are closed, it could prepare us for a pretty volatile open at the turnaround from Sunday to Monday morning. So yeah, definitely maybe worth keeping an eye out for any headlines that come out over the weekend. Next up, looking into gold. Now we're basically picking up from the same headlines as with FX, with the tensions between Russia and Ukraine likely going to be the main driver for prices of gold. As we also mentioned in the look back of last week, the yellow metal is now, if we look at the chart here, it's basically at the upper end of a range starting all the way from March in 2021. So you can see the higher end here with the lower end right here. If I just zoom out a bit, you'll be seeing it more clearly. So you can see if we just plot like a line here and then one at the top, we can see we're pretty much at the middle towards higher end of that range. So it's going to be interesting to see, depending on the reports, and if we have any further reports, which we're likely going to have with regards to Russia and Ukraine, whether prices will be able to break out on the upside, to break out of this range, and maybe even potentially retesting the all-time high. Prices are above the EMA. If I just plot one quickly on the chart, well, you can also see the RSI at the bottom of the chart as well. Just switch this 21 period exponential. So you can see we're trading above the 21 EMA with the RSI giving a reading of 58. Now we'll look into oil prices briefly as well. Now, as we mentioned, oil prices have been on a tear recently, basically printing an 8th consecutive week in the green last week, and with a combination of tightening supplies, depending on the inventory report that we'll be having on Wednesday, the tensions between Russia and Ukraine again, as well as the renewed conflicts in the Middle East, we could see its prices being boosted even further. Prices are now nearing the $100 mark. I mean, they're more towards the mid 90 range, but obviously we can see with the trend of the 8 consecutive weeks in the green, we can expect obviously some kind of retracement which could be seen as healthy, given this rally that it's been having for the past few weeks, and then maybe even retesting the $100 mark. The RSI, again, obviously worth just to keeping it in context and in comparison to your parameters, it's now at the reading of 71. So depending on the levels that you've set, if it's the 80 and 20, it's still not overbought, but if you have it as 70 and 30, which is the other common parameters, it could be seen as overbought on your charts. And then lastly, we'll be moving and have a look onto Bitcoin as well. Now, prices of Bitcoin, if I just switch this to a weekly time frame, they've been trading in a price range between 40,000 and 46,000. Now, while you can see here, it looked like it was going to post a 3rd consecutive week in the green. At the time of making this webinar, its prices are in the red on the week, although it's worth noting that it's only by a slight margin of 0.06%. We also had an article on Cointelegraph which cited that another sign that investor sentiment could be turning positive is that the crypto exchange balances of stablecoins soared above $27 billion for the first time, according to the on-chain analytics platform CryptoQuant. We can see we had estimated this zone where we could see some potential retracements. As we can see, we're getting a bounce back in prices, which retested briefly. I mean, didn't really retest, but it came close to retesting the 21 EMA. And you can see we just strongly rejected off of it, and it's now trading in the red. Of course, the week ends on Sunday's close, so there's still some time to see whether we will post a gain on the week or not. There you have it. This is as far as the outlook for next week's markets. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.